Okay, time for a market review. Let's see what's going on. And to help out, of course, we got Alex from Macro Ops. And what we're gonna get into is that this whole quarantine and the way we're living life right now, it's kind of the new normal. It's not gonna go away as quick as people think. But before we get into it, the explosive stocks checklist. There's still opportunities in this market, especially when we're getting rebounds. And these are the type of stocks you could get in, they explode higher, and you could jump out. They should work with this type of volatility. So this checklist shows you how to find them. Link down below in the description and comments. It is free. So let's talk about what's going on. So I don't know if you guys know Brent Bashore, but he's a really smart private equity guy. He works with a lot of companies with revenues of 15 million and under, so he's like a small business guy. So he recently released a piece, and in it he talked about what's actually going to happen with the economy because he has boots on the ground. Not what the politicians are saying or anything like that, but the actual businesses that he works with. So what does this mean for the economy, what we're going through? The short answer is that no one actually knows anything because there's too much uncertainty. Duration, regulation, biology, virology. There are way too many variables to try and triangulate what's going to happen. And you know the information is changing every day. Like Tuesday, you're supposed to wear a mask. Wednesday, all of a sudden masks are bad. Thursday, back to masks. It's like the health warnings about eggs, how they change every few years, but just all compressed. Are eggs good for you or bad for you? I don't know. But I'm gonna keep eating them. Just like I'm wearing a mask whenever I go to the grocery store now. And it seems like a lot more people are, so that's a good thing. So we don't know what's gonna happen, but at the same time, we can now say without a question that this pandemic has really materially hurt the economy. So here's his best guess of what happens next. So we're headed for 3 phases: lockdown, which is what we're in right now, winter, and then a new normal. So it looks like we will flatten the curve, and that will put less strain on the hospital system. But while flattening the curve, as you know, we're screwing up the economy, because to flatten it, we need that government mandated or self-imposed lockdown. So we can say that the cone of plausible outcomes, which means probabilities, they have narrowed a little bit. Like there is more certainty that there was before, but unfortunately that certainty is about the probability of the bad outcomes happening more than the good ones. So the optimistic outcomes are becoming more and more improbable as this thing goes on, while the middle to worst scenarios are becoming a lot more likely. And that's just based off how we've been reacting to this thing. So based on that, there's a few things that we know now. This whole corona event is not a temporary shock, and the varying degrees of social distancing, that's here to stay for the future. The paradigm has shifted, and the social, political, and economic impact of this virus will be significant. So we are entering a new normal. And I don't think this idea of the new normal has hit the populace yet. Like people don't realize how long-term this quarantine and social distancing thing is going to be. So I got a ton of friends getting married this year, but it hasn't hit them that their weddings are actually not going to happen. So I know brides that are just holding back tears right now, talking to me like, you're still gonna come to my wedding, right? And I'm like, Lisa, you know this isn't about to happen, right? What? It's denial, and I kind of get it, but at the same time, I was personally done with weddings before this even came about. I have been so tired of them. I mean, really, the audacity of my friends to think that I want to celebrate their life accomplishments with them. Is it really an accomplishment getting married? Literally anyone can get married. Why are we celebrating? Actually, gay marriages, I'm down to celebrate, because those are still new, and you guys made it happen, so fight the power. Like, let's celebrate. But for the rest of the weddings, it's like elementary school graduations. Why do they have them? I don't know, because what are we really celebrating here? Anyone can graduate elementary school. Does anyone have the stats of elementary school dropouts? What is that, a -2% dropout rate? That's one great thing that I learned from my Indian parents. Never celebrate any accomplishment because accomplishments are expected. They are the baseline. Doing really well is the baseline. That's the normal. The only time you should react is when you fail, because then you should chastise yourself. So the goal in a young Indian boy's life is to cut off that upside and just strictly focus on the downside. It's a very effective way to live, just waiting to fail all the time. It's actually similar to how a good investment manager should think. Should I go into a risk control monologue again? No? Okay, I'll save that for later, because I gotta keep ranting about weddings, because why are people spending 6 figures on a wedding? And all you're doing is throwing a party that's just like the last 4 weddings I just went to. And it's all the same, it's not even fun, and there's way too much focus on the bride and groom. The focus should be on the guests coming to the party. I mean, if you consider that little envelope I gave you, then the fact is that I paid to get in here. You should be catering to me, because honestly, if this was a business like a club, you guys would shut down. No one would come here anymore. And these people will spend 6 figures on a wedding, but I still can't even get a decent piece of cake. You spend thousands of dollars on freaking like table placements, like napkins, and then thousands more on flowers, but I still get this vanilla, flavorless slice of cake. Why? You might as well had that huge 3-tiered cake just be made out of cardboard, because that's how this cake tastes anyway. And then on top of this, you spend tens of thousands of dollars on a wedding band. Unless your wedding singer is this guy, or this guy, because he was the best too, then really all you're doing is paying a bunch of glorified karaoke singers when you could have got a DJ for much cheaper. I mean, 90% of the Punjabi guys I know are DJs on the side. I swear these guys are literally born. They come out of the womb holding a subwoofer, and they could do this wedding for a tenth of the price. I mean, will you get a bunch of bunga music that you don't necessarily want played, including the DJ's own original songs with frequent shout outs to his Spotify release happening next week? Absolutely, but it's still worth it. These weddings, man, I don't get it. Who do you think you are celebrating yourselves like that? Just go to the courthouse and make sure you wear a mask. But either way, I guess I don't have to go anymore, so whatever. So when talking about this new normal, Brent says that 5% of existing companies will remain untouched by the paradigm shift. So they're gonna be just fine with quarantine life. 5% will feel a tailwind, so they'll actually do better, like all those companies providing quarantine lifestyle items. If you haven't seen them already, they're about to pop up. And then 90% of businesses will experience at least a medium-term impairment, so mostly everybody. And 30% of those guys will no longer have a viable business model due to shifting demand, stop-start problems because of quarantine going on and off, and a loss of operating leverage resulting in high fixed cost burden. So shifting demand is because, people can't go out anymore. How are you going to go to a movie theater? Stop-start problems goes back to what we talked about in the previous video, where we can be in and out of quarantine over the next 18 months. Because honestly, what solution is there unless we get a vaccine or some antiviral stuff? And a vaccine won't be coming for 18 months. So they let us out of our houses, everybody gets infected, and then they do quarantine again so that the hospitals don't get overwhelmed. And it's back and forth like that for 18 months, and businesses can't operate like that. And they're losing their operating leverage, meaning that they can't afford their fixed costs because they don't have that steady money coming in. It's not creative destruction that's going on here. It's just straight up destruction. So he says plan for a tremendous amount of pain personally and professionally. Jesus, okay. Thanks, Brent. Well, he's not here to sugarcoat it. He believes over 20% unemployment is inevitable and could rise as high as 30%. That's much, much larger than the Great Depression. And GDP is going to drop 30 to 50%. And even when we get the recovery, it's likely not going to be V-shaped because the right side of that V is not going to rise to the same level as it was before, unless you lengthen the time scale. So really what we'd be looking at is a backward checkmark recovery, but a backwards checkmark would be like this. So really instead of a checkmark, it should be an L just tilted like that. So see, it's like a V, but it cuts off right here. And now you know your shapes. You're welcome. I was watching one of my recent videos and I realized that I explained to you guys what an island was. So in the video, I said that I was on an island, which is basically a piece of land surrounded by water. So we get deep here on Fallible. I explain the really tough stuff. But anyway, in the near term, the average business will experience a catastrophic decline and around a quarter of your neighbors will be unemployed. So when would that backwards checkmark or half decapitated V take shape? That'll only happen if there's only one period of global lockdown. So we actually don't keep going in and out of quarantine like I mentioned in the last video. And then after that quarantine, we swiftly get a cure to this thing, a vaccine, which as I said before, that's going to take 18 months, so it's very unlikely. And at that point, re-employment and daily activities will have been materially disrupted, but not permanently impaired. So they could come back. But the longer they're out, the more likely they're going to be gone when things turn around. So think about your favorite local restaurant. Is it going to be able to survive through all this quarantine? Likely not, which is really sad. So again, if the lockdowns continue or we cycle through them, the effects are going to keep rippling and they're going to suppress every type of economic activity, from banking and the credit markets to discretionary goods. It's going to hit everything. The longer it goes, the more it's going to hurt. So an unemployment rate of 20 to 30% is historic. So if you look at this chart right here, that would be right here, this red line. And this is going back 75 years of the unemployment rate. In the great financial crisis, the peak was 10%. And then the peak was 24% during the Great Depression. So Brent is saying this could go up to 30. So like Alex says here, he agrees with Brent on all his points. And as I mentioned, he runs a long-term PE fund that specializes in small, sub 15 million in annual owner earnings businesses. Okay, so it's sub 15 million in earnings, not necessarily revenue. So he's going head to head, like he's on the front line of these economic repercussions because he works, hand in hand with his companies. And as Alex says here, a lot of this is only going to be apparent to the rest of us about how bad this economic stoppage is when we find out our favorite restaurant, cafe, bar, gym won't be opening their doors again. And you guys can all agree that this gym closure has been devastating. I've been forced to run outside. And do I look like a runner? And you know I don't look like a runner because I'm not a runner. So I'll be running extremely slowly, just dying. And I could see people inside their house just pointing and laughing. Like, what is that guy doing? Can we even call that running? Honey, come look at this. And then all the dogs in the neighborhood are just barking at me as I pass by, just taunting me. And they got a ton of time to bark too, because I'm running like slower than most people walk. It's a very public, shameful display, but I'm getting used to it because it's the new normal. So here's some thoughts Alex has about how it screws the stock market too, because there's some other things at play that the coronavirus is just gonna, accelerate. So US households right now are holding more equities as a percentage of their total assets more than any other time in history, excluding the dot-com bubble when everyone was wild. And a majority of these equities are held by aging boomers. And according to the required minimum distribution law, after turning the age of 72, these boomers got to take their minimal annual distribution from their retirement accounts. So they got to, according to the law, start cashing out on their stock holdings. And what does that mean? That means we got forced selling. And that's going to become a pretty strong headwind because all these people got to unwind their positions. So according to census projections, the total amount of retirees that got to do this, they got to start pulling money out, is 58.7 million investors. And now they recently passed this Secure Act, which is what my financial advisor buddy always complains to me about, because now the entire balance of that participant's account has to be distributed within 10 years. They didn't have that time limit before. So that accelerates the selling because they got to get rid of all of it within the decade. So this equates to roughly $10 trillion in financial assets being withdrawn and converted to cash over the next decade. And to put that into perspective, the market cap for the entire US stock market is about 23.8 trillion. So that's almost half. So if you think about it, imagine you're the average US retiree with 195,000 in your IRA. You have to start taking annual distributions from this account, and they have to be above a minimum amount. And that minimum amount increases each year. And you have to drain that account over the next 10 years. God, the government just, putting their boot up your ass. So you've been holding mostly equities because there's been really low yields in bonds and they forced you to try and get some return, right? So you had to be in stocks. And no one saves enough for retirement, so of course you're holding more stocks to try and make that up. And the recent volatility has been painful because you've seen your entire life savings be cut over 20%, right? As you're about to retire. But you learned your lesson in 2009 and now is the time to buy when the streets are filled with blood and there's panic, just like, Buffett does. So you step in and end up buying more stocks and up your risk. But the market doesn't turn and the bounce fails. Maybe you buy a little more because you're sticking to the Buffett thing, but then the market pukes again. At some point, you're going to be bleeding red across your IRA statements and your uncle point is going to be hit. So you move into survival mode and cash out of everything that you can, no longer able to withstand the volatility. And the scenario that Alex is talking about right here is considering that this is not the bottom, that this whole rally right now is just a bull trap. The bottom won't be in for another 12 months. It's going to be a double bottom. It's going to be nasty. That's our thesis right now, at least if you've watched our previous videos. So equities are great to hold when you're young, and volatility actually benefits you in the long run because it increases your returns. More volatility is more returns, and you're able to put in more capital at lower prices because you're still contributing on the way down and you get more bang for your buck. But this flips when you're retired because as a retiree, now you don't work and all you're doing is consuming. So volatility just screws you because you're forced to sell more in a downturn in order to raise cash for your consumption now because you're not adding more to the market because you're supposed to be taking it out. So the implications for the stock market over the coming decade are not good. Have you had enough bad news? No? All right, I'll give you a little bit more, just one more thing. Another long-term hit to profits is going to come from falling CapEx, which is capital expenditures, businesses reinvesting into their business. Because profits in the economy come from investment. Invest now, more profits later. That means you need companies borrowing to invest in future capacity. But companies are only going to invest when they think the future looks better than it is today. And banks are only lending when it's the same case because if things are better in the future, then they'll get repaid plus their interest. Otherwise, why would they lend? So this credit-centric system that we live in is just a giant confidence game. Assets are only going to be worth what the next person is willing to pay for them. And those values increase when people are optimistic because they borrow and consume and invest even more. But the reverse happens when optimism fades, and that just all goes back to the debt cycle. Credit and money, they expand and contract based on how people are feeling. And this virus is going to make us all feel pretty bad because if it's not the sickness that gets us, it's just going to kill our risk preferences. We're in a new normal. And this isn't a prediction about markets in the short to intermediate term. Financial assets aren't directly tied to the economy. They trade off money supply and relative preferences. And really, anything is possible when the Fed and government are both fully fire hosing the economy, pumping money into it. So this whole thing is really just a possibility, just one of the many plausible outcomes. But the one that we're talking about here isn't being priced in, or is it being expected? Which again goes back to why we think this market could go a lot lower. Me personally, I'm hoping for some miracle because we're Americans. We'll figure out a cure or something, right? It shouldn't be so bad. We'll work our way out of it. And I gotta think like that because I need a haircut so bad. Before this whole quarantine thing, I thought to myself, you know what? Let me grow out my hair a little bit. Let me get this beautiful Mike Douglas style Gordon Gekko slick back. But then, just as I needed a little trim, quarantine hit. So honestly, I don't know what's gonna happen in 18 months. Am I gonna start looking like Joe Exotic? Probably. This is probably my future, and I'm just glad Tiger King came out because hopefully this becomes popular again. I feel like a lot of us are gonna end up with mullets. Or maybe we just all go back to the 80s style hair, which isn't exactly a mullet, but it's not bad. So definitely make sure to subscribe to see what happens with my hair because I know you guys care about that so much. And if you haven't already, make sure you get this free checklist too because this is way more important. This is actually helpful. Just because we're in a longer downturn does not mean you can't make money on the upside because the market doesn't go straight down. You're going to get big rallies. You just got to know how to play it. This will help with that. Link down below in the description and comments. Okay, subscribe and I will see you in the next video. Stay fallible out there. Bye.